Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing's financial advice. This is for educational purposes only, and it's my view of the markets. Now that's out of the way, let's jump into the chat, shall we? And what a awesome few days we've had. Up only, you know, it's been that time of the market where even the Moonboy influencers have started to get things right, which always concerns me. You know, the same guys that told you that this was the absolute bottom, this was the absolute bottom, this was the absolute bottom, this was the absolute bottom. Then eventually, when they finally get one right, then they're telling you that they told you so. Even though you've completely ruined your entire account balance by trying to long every single dip, thinking it was the bottom. But anyway, let's move on. Luckily, obviously, the reason why you guys are watching this is because you want a no BS view of the market, and that's what you're going to get. So let's jump in. Obviously, normally we start off on a trade roundup of what we've been taking in the group this week. And there's not much to give you, to be honest, because there's not been many trades to be had. So the main one, let's talk about it, was obviously the public setup that we gave you last week. In fact, we've been giving you this setup now for, well, ever since the highs, effectively. So, you know, a couple of months. We've been saying, and if you don't believe me, you can even watch last week's Bitcoin update where we were talking about when we were here, and I was playing you a clip from inside our private members group where this was front running the level. Everyone FOMO'd up here thinking that they'd missed that perfect SR flip, and then we come back through, and as I've been saying for a long time, I'm not looking at this as a perfect line. I wouldn't be interested in this as a perfect line, and the reason being is because there's so many people waiting to bid that level. What happened? We broke below it, came into that sticky zone that I talked about, and then we got the push to the upside. Now, the beauty of this trade in the end, now, effectively, again, this is just a placeholder. You can actually see my trades if you come into the Discord group, or you look on Twitter, you'll see exact entries and everything else, the reasons behind it. But effectively, you know, 11, 12-hour trade out of that. Now, realistically, did I hold on to it the whole time without taking partial profits? No, because I'm not a degenerate, because we did have resistance levels within this. Now, don't get me wrong, in the end, those resistance levels didn't hold up, and we just pumped straight to the upside. Okay? So that was the trade. So if you did catch that, well done, pay yourself. You know, we're at range highs now. We're just trading level to level, trading the range. You know, take a bulky profits. If you want to leave some open just in case it does break out, then, you know, that's completely up to you. That's how I personally trade it. You know, there is a small portion left, and if we do continue up, then I can always look to add back in later on, and that's how you trade a range effectively. You're not interested in the breakout. Now, one thing that we should talk about this move up. Now, this move up, it's a fairly thin and inefficient move up. So let's zoom in, and let's zoom into the 30-minute chart, shall we? We can see this, obviously, from the lows. In fact, we'll bring this back up. From the lows, you had a couple of opportunities, but that's about it, because it's not really given bulls an opportunity to get involved in this, because it's been up only. And this is the sort of price action that makes me cautious. Okay, now why does it make me cautious? Because realistically, if you didn't catch this, okay, you had the perfect back test of the old range. Okay, here. This is on a lower time frame. Then we pushed up, and we started consolidating underneath the top range. Okay, let's just change the colors of these so we can clearly see the difference. Old macro range and what I'm referring to as the top range. We're consolidating below this range. In the end, we broke through, and then we got a perfect back test. Okay, so effectively, if you didn't catch this small range trade down here, absolutely fine. I understand that, because, you know, you could have been absolutely filling your pants, scared that it was going to continue down, and we got acceptance back into the old range and it dropped down. Absolutely fine. But we got out, we got this perfect back test, we came up, hovered around, broke through, again, perfect back test, and then we've just plowed up. Now, within this, we can see that we've not created any decent structure. All we've done is just continue up. Continue up. So all this is FOMO bulls trying to ape in wherever they can, because they're seeing that people are shilling the bags, and, you know, there's profit shots going all over Twitter, and everyone's getting excited, and there's all this news coming out about all these ETFs that are getting requested, and yada, 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 yada. So everyone's just FOMOing in. At the same time, you got the opposite side of this, and that's where there were, as I said, there were quite a few SR levels within this. There was resistance, you know, even just keeping it dead simple. You had from the volume profile to contend with as it's coming back through. So we had the point of control, we had the range EQ / value area high. We had this sticky zone here. We had this sticky zone here. In the end, it didn't give us any trades because we didn't get a decent enough reaction off those levels. Okay. And what am I looking for off those levels? Well, what I'm looking for is I'm looking for it to come up to these levels, then start to form a range, and then change market structure and break to the downside. So only at that point then is when you start to get involved in shorts. But what people are so concerned about is they know that there's SR levels and there's resistance here. So what they're doing is they're just shorting. So what they're trying to do is they're trying to catch the absolute pico top so they can maximize the risk to reward. But all it's doing is just adding fuel to the fire, and it's going up. I was posting this on Twitter yesterday saying stop shorting every 1 minute candle, because all you're going to do is just keep destroying your account balance. You know, some people will be shorting it for genuine reasons because there are, as I said, there are resistance levels here. Some people are shorting it because they've missed out on all this move. So they're revenge trading. Okay, and that's the thing. If you want to make this as a trader and you want to turn this into a career and you want to live off trading, you need to be smart about these things, which is why this whole move up, apart from one consolidation that we had, which was this one here, this was the only one I was interested in. And I did take a short trade based on a swing failure pattern here. Okay, I saw in the time, I'll zoom in here, you can see this. So in the time, we had the swing failure pattern, then we came down, but what happened is, you can even see it from this red squiggle here that I've got, we never broke any structure. Okay, we never broke any structure. So if this would have then broken structure to the downside, taken out these lows, then coming back down to the EQ, I'd be then saying, okay, well, that's a take profit one. Now let's see if does it lose the EQ and continue down. In that case, I could let the rest of it run. If not, we look higher. But what I was aware of at the time, and this is again what I'm talking through the group in the members, that if it doesn't lose structure and didn't lose VWAP either, then we can look for higher. In that case, I'll just get stopped out at break even. Absolutely fine. Yeah, I pay a little bit in fees for the entry and the exit, but you know, it saves my capital. Okay, so that was the only real opportunity that we had for a short. Okay, but people continually try to short it, which is again just added fuel to the fire to bring it to the upside. Okay, so it's something you've really got to control. You know, it's a massive part. Learning technical analysis is so easy. It's unreal. It's just like learning any skill. It's like learning a second language. It's easy. Once you understand it and you've done it for a while, it's very easy. The hard part is the psychology. And the hard part is understanding when to step back and let the market show its hand before you get involved. Okay? As I said, this was the only opportunity, realistically, for a short. And in the end, it didn't play out. And we continued squeezing up. Okay? Which is, again, why I was talking the team through it all day yesterday. I spent God knows how many hours in the group yesterday, just talking the team. No shorting, no shorting. We'll just keep looking higher. Okay? Next area of interest. Once you get to that area of interest, does something happen? No, right, we'll let it go higher. Okay? And in the end, it got stopped out just above the range highs. There was an achy point of control up here. And that was the first reaction, or the first decent reaction of the day. Okay? So hopefully you've learned something from a little waffle there. But that's something you've got to be aware of. Okay? This, to me, again, even though it did continue going higher, it wasn't the time to FOMO in because you're just chasing candles. But in the end, you know, when you're in an up-only market, you do get rewarded for doing stupid things. Okay, so what am I looking for next? Well, first and foremost, if it isn't obvious, we are still range bound. Okay? We are range bound until proven otherwise. So I'm happy to continue this range, continue trading this range until it breaks. Okay? And whether that breaks to the upside or it breaks to the downside, it makes no difference because I'm still long from the lows and I'm still short from the highs. Okay? I have hit the take profit one on this because we do have a little range going on here and I'm seeing what the outcome of this. If this range does start to break down from here and we start to lose some serious structure, then again, this is thin. This is an inefficient move. Okay? Creates no structure. So the likelihood is, if this does start to roll over, it's going to roll over fairly fast. Now, I'm not going to say it's going to go straight down towards range lows because we do have some volume here. Okay, which again is around your EQ. Okay, so it's just range trading. You got your range to your EQ, and then you've got your bottom of your range, 2 halves. Okay, that's if it does continue all the way down. Now, what happens if we do consolidate here and we keep that structure to the upside? Then likely we can look for it to break out of this range. Now, by breakout, does that mean I'm going to get FOMO and I'm going to start longing up here? No, it doesn't. I just don't see the point of doing that. What's the point in trading a breakout when ultimately a breakout, just like this one, has a very low success rate? Okay, I did a whole video on this about why I don't breakout trade. So, if it does break to the upside, then first things first, we've got to be aware of a swing failure pattern of this level. Okay, we've got to be aware of that. So if it does come up, take the highs, takes the liquidity from up here. Bear in mind, anyone that's been shorting this hoping for a swing trade has likely used this pivot as their stop loss. Okay, so if it does come up here, grabs that liquidity, comes back down, and then gets back into this range, then that's going to be quite a bearish sign. Okay. Now, does that mean bearish is in brand new lows, as in like we're going to take out the 15k lows? No, it just means that it's a bearish sign and we just continue trading this range. And again, like I always say, we trade the range until it breaks. Okay, what happens if we don't get this? What happens if it comes above this and just continues up? Okay, well, if it continues up, then we need to zoom out, because then we start to look at some higher time frame levels. Okay, so first and foremost, as you guys know, I'll always throw on to see where the volume is. There we go. So that's first and foremost. The next one would be coming up into this range here. Okay, so this is the range that I'll be watching next. Now, by this range, this is what I'll be looking at. Looking at this. Okay, just shorten that down so it doesn't confuse. Okay, so this is what I'll be looking at next. So if we do continue up, let's jump onto the weekly. We'll get above this high without a swing failure pattern, and we start coming up. So first and foremost, what we've got to be aware of is we've got some highs here to contend with. Did we get a pullback from these highs? Yes, no. Okay. If yes, we're looking for shorts, and then we're looking to see if it gets back into this range. If no, and it just does continue up and it fills out this thin move, bear in mind, if we zoom back to the daily, we can see here, these are the highs that are in question. If we get above these highs without a pullback, then we're going to start filling this thin move here. Okay, and then that's likely going to bring us back into this old range. Okay, if we do get back into that old range and we get acceptance, then we're going to be looking to trade it back up towards 39/40k region, because we've got a naked point of control here, slash the EQ just above it. Okay, so we've got a bit of a zone. So that's realistically your next major level of resistance to the upside. You start to clear above that, then we're just looking at these range highs. Okay, get above these range highs, we're looking into the overall point of control, which is roughly around, call it 47.5, 48k for easy numbers. It's a zone. Okay, but effectively all you're looking for is if we get accepted back into this range, let's extend this along again. You just look and see if we get acceptance back into here. If we get acceptance back into here, then we're just trading this range. Okay, with key focus on this red zone here. That's all we're doing. People get overly bullish after seeing a move like yesterday. Okay, and yes, it's a decent pump to the upside. Okay, but people just expect now that this is just going to go straight up. Okay, straight up, new all-time highs, past 69k, and it's just going to go. Okay, straight line. Okay, it could do that. But let me tell you this, if it does do that, then that'll be the most thin, inefficient move you've ever seen, which means it likely then just goes like this and fills the whole thing back out again. And then euphoria up here, because you're not going to take profits, let's be honest, because if it comes up here, you're not going to take profits because you're going to have every man and his dog chanting for 100k. Okay, so you're not going to take profits, just like you didn't take profits up here because you're looking for that 100k level. Okay, so likely you're just going to do it again and it'll just give it all back. So you don't want it to go up in a straight line. You want it to create structure, just like it did on the way down. It came down, it formed a range. It came down, it formed a range. It came down, it formed a range, which means now we have structure to the upside to contend with which has given us our resistance zones. Okay, that's what you want in a healthy market. You want impulse, range, impulse, range. Now that gives you structure. And then when you start coming back down, you're just coming back into these old ranges. Okay, that's how we trade a bear market. Okay, sideways market. So you don't want it to pump straight up. You want it to come up and be constructive. Okay, so that's what I'll be looking up to the upside. Now, what happens if this current range does drop to the downside and we break down from there? Okay, well, that's the next thing we've got to look at. So if that happens if this doesn't hold and we do roll over, continue trading this range, and if this range then breaks, and then we come out of this, then we come, ooh, didn't mean to do that, right clicked at the same time, okay, and we get back down here, and first and foremost, we've got to see if does this hold again the second time, okay, if not, then we'll come back in and we'll just trade in this range, and once again, I emphasize the sticky zone down here, potentially taking these lows, if not, then we're looking back down towards EQ or potentially lower. Okay, if we do get acceptance back into this range, it's not going to look very good for the bulls. Okay, as a range trader or as a technical trader like us, absolutely great. Okay, interrupt this by bringing you today's sponsor. Today's sponsor is BingX, a crypto exchange that also offers trading on FX, stocks, commodities, and indices. And the beauty of these guys is you can use crypto as collateral. Now, a lot of guys in the comments seem to be asking about non-KYC exchanges. This is an exchange where you don't have to do KYC. So obviously, if you do want to trade somewhere that's got decent volume behind it, then BingX is the way to go. Now, the other thing to note when we're talking about this is obviously I'm telling you about preventing the guys from shorting all the way up here, giving these guys the levels that I'm interested in. Obviously, if you want access to that, you need to go down into the comments and look for our website, which is spitfiretraders.com. Okay, on here you can get access into our free Discord. Okay, soak up as much information from our free Discord as you possibly can. Okay, if you then want to take your trading to the next level and get access to my daily updates and access to an extensive educational library of videos, over 100 hours to learn from, okay, in your own time. Everything from absolute beginners, range trading, fibs, volume, harmonics, footprints, and the order flow software that we use so we can see where traders are caught offside, how to manage your trade and how to manage your head. Okay, Elliott wave theory, psychology, big set of modules here. We'll be kind of adding to this next week as well. Altcoin strategies, again, I've been saying for a few weeks now, there's a few altcoins in decent places right now, which is why we've got some significant longs open at the go. Accumulation and distribution, and then individual trading strategies as well that you can just use as standalone trading strategies, okay? And all this will cost you the grand old price of $59.95 Great British pounds, or in US dollars, that's $75. I made a joke on Twitter the other day that some of you guys will happily pay $250 plus a month to have some signals that are ripped off from other people's groups, and you don't get any real education in some of these groups. It's just, you know, here standard EMA crossover strategies, or this is how we use the MACD, or this is how we use the RSI. But for me, 60 quid, I just want you all to be able to access this kind of education and access my trading plans. Okay, so it's not going to break the bank. If you really want to invest in yourself and do well this bull market, then treat yourself. If you don't like it after a month, it's cost you the best part of 60 quid. All right, okay. Right. That's the upside. Major resistance for me if we don't get a swing failure pattern of the highs. Downside, continue trading this range. Again, be aware of this thin move. There are SR levels in between here, but again, this has just wiped most of them out. If we do start to lose this, then we're looking at this old range. Okay, very simple, level to level. Okay, we're not in full just long everything market. We've still got a lot of resistance to contend with. Okay, if we do go straight through this resistance, fine, there's no trade, just like here, no trade. But if not, then we're just playing it level to level until we actually officially break out of all-time highs, which is just like what happened back here when we broke out of all-time highs around 20k. This consolidation here before the actual breakout, we still pumped from here another 223%. If you caught that move alone, that did you well, which means that you could have ignored all this price action down here. Okay, you wouldn't have had to get involved and get chopped up left, right, and centre. And that's how you got to think of it again. Okay? Don't be in a massive rush. Okay? Yes, we are uptrending. Okay? Yes, I do have some spot bags on the go. But until we start to clear out of this, and effectively, once we start getting above this, then yeah, I might start flipping bullish. Okay? Right, that'll do. Hopefully you've learned something today. If you have, let us know down in the comments. Let us know if you want us to keep bringing these videos, including the trade updates. And until next time, gang, as you were, bye-bye.